Right now, you stand before the greatest wealth-building opportunity in history. But simultaneously, it's also the most dangerous moment. If you don't act, you'll lose everything. There's no more time to hesitate. The wealthiest people are frantically restructuring their assets every second. Don't think this is just another ordinary recession. This could be the worst financial crisis humanity has ever witnessed. If you haven't been glued to financial news, you might not realize it. But those golden stocks that last year you could blindly buy and still make huge profits, they're now crashing. Nvidia is down 28%. Tesla, once last October's hopeful darling, has plummeted 46%. Amazon, Facebook, Google, any giant you can name has evaporated at least 15% of its value. Millions of investors are in a state of panic, questioning everything. But what if this is just the beginning? What if the market continues to plummet? In just one night, countless investors using financial leverage could lose everything. They'll be forced into fire sales, triggering a global asset collapse. When that happens, this won't be a mere price correction, it will be total annihilation. This happened in 2000, 2008, and 2020, and now it's about to happen again. But the scariest thing isn't the market crash, it's this. This is exactly what the U.S. government wants to happen. Why? Because only when the economy is in recession will the entire world pay the price for America. Have you noticed? The Federal Reserve Bank of Atlanta, a branch of the Fed, once projected Q1 U.S. GDP growth of 2.3%. But late last month, they quietly revised that number from positive 2.3% down to negative 1.5%. What does this mean? It means they are publicly admitting that the U.S. has entered a recession. Just a few days later, the numbers were revised again, this time plummeting to negative 2.8%. What does that mean? It means the U.S. is not just in recession, but the situation is far worse than initially predicted. If Trump gets elected and the stock market rallies, it will plummet uncontrollably after he takes office. Declaring a national recession is incredibly sensitive in many places, but even the U.S. government has publicly admitted it. A barrage of official economic data is screaming at us. Things are getting worse. Lately, I feel like those old-timers from decades ago, glued to their screens, watching Trump's every move to see what he'll do with the stock market. Remember? 4 or 5 years ago, Trump just needed to tweet one line and the market reacted instantly. He constantly demanded the Fed print money to stimulate the economy, causing explosive market growth. But what about this time? He hasn't said a word about the stock market. Why? Just as I was about to turn off the TV, the U.S. Treasury Secretary appeared and announced, the government's main objective now is to keep long-term bond yields from rising too high. Simply put, they want to ensure that U.S. bonds can still be sold. What does this mean? Look at this chart. It shows how much money the Federal Reserve has in its wallet. You can see that since 2022, their wallet has been continuously shrinking. So what will they do? They will borrow money from the wealthy. The Fed will use U.S. government bonds as collateral, asking financial institutions and tycoons to lend them money. This is called a reverse repo transaction. In other words, the Fed is borrowing money from its own financial system. Look at this chart. The higher the blue line, the more bonds the Fed has to pledge to borrow money. The Fed's borrowing capacity is being pushed to its limit. But the opposite is happening. This blue line will drop to 0 this month. That means even the Federal Reserve cannot borrow money from its own financial institutions. There are two possibilities. Financial institutions genuinely have no money left. And if they have no money, how can they lend to the Fed? Even if they have money, they'd rather hold cash than accept the Treasury bonds the Fed offers as collateral. So who will buy U.S. Treasury bonds? Currently, the Fed's cash reserves are almost depleted. They can't borrow. Large investors in financial institutions either have no money, or if they do, they don't want to buy U.S. Treasury bonds. Meanwhile, China, Japan, the UK, and many other countries have been dumping U.S. bonds in recent years. This means U.S. bonds are facing a liquidity crisis. In other words, they are no longer circulating normally in the market. Why? Because more people want to sell and fewer people want to buy. That's why Trump's financial point person said their most important task is to ensure that long-term U.S. Treasury bonds can be sold. The solution is simple. Make America great again. Sound familiar? For example, the government will cut personnel. Large corporations will also lay off employees to increase the unemployment rate. Then they will raise tariffs to create higher inflation in the U.S. But most importantly, they will impose sanctions on the whole world, even deliberately cause a financial crisis or economic recession. First destroy, then rebuild. That's how they make America great again. But for us, this is not the time to waste a good crisis. When most countries around the world cannot escape this vortex, money will seek safe havens, the assets we have prepared beforehand. This is the opportunity to not only protect your wealth, but also to create a new generation of millionaires. If you don't want to become a victim of this crisis and even want to ascend to a higher economic class, then follow my channel right now. I will continue to provide you with critical information. And if you're afraid you'll forget what you just heard, hit the like button on this video. That way, it will automatically save to your playlist so you can rewatch it anytime. Now, the question is, why are U.S. bonds facing a liquidity crisis? Can't the U.S. just use its own money to pay off its debts? The answer is very simple, because the U.S. dollar cannot be recalled. What does that mean? Listen carefully. U.S. Treasury bonds are essentially a borrow, spend, recall, repay cycle. For example, in the past, the Fed could print $5 trillion, then use that money to buy U.S. Treasury bonds, meaning they lent to the U.S. government. The U.S. government would owe the Fed $5 trillion. Then the U.S. government would take that money to buy goods from all over the world, importing everything. When that $5 trillion is spent, the U.S. government will have no more money. So what do they do next? This is when the capitalists came up with a plan. The U.S. spent $5 trillion globally. So if they can recall $4 trillion, only $1 trillion will remain in the world, causing the entire world to face a money shortage. At that point, other countries are forced to continue selling goods to the U.S. to earn U.S. dollars. At this point, I can continue printing money to buy all the goods in the world, right? So how do they recall the money that has been spent worldwide? Very simple. They just borrow it back from them. They sell U.S. Treasury bonds to them and say, lend money to the U.S. government. When the U.S. makes a profit, we will repay both principal and interest. This means that countries selling goods to the U.S. earn money from the U.S. and then invest that money back into the U.S. Americans are essentially working for them to pay off debt. The result? The entire world uses a portion of the money earned to buy U.S. Treasury bonds. The Fed prints $5 trillion, the U.S. government spends $5 trillion, and then, by selling bonds, they recall $4 trillion. Thanks to this, the world doesn't have too many excess dollars, and the Fed can continue to print another $5 trillion to lend to the U.S. government. The U.S. government continues to spend, sells bonds to recall money, and then prints more money. Do you understand? In other words, U.S. Treasury bonds are a mechanism that helps the U.S. recall money from around the world. Their goal is to do nothing and still be able to use printed money to buy all the goods produced by the world. So, whether the U.S. government currently owes $36 trillion or even $100 trillion or $1 quadrillion, it's not a problem. As long as about 40% of this debt comes from other countries lending to the U.S., this system will continue to function normally. Simply put, as long as the U.S. can recall the money it has spent, creating a dollar shortage in the world and maintaining the need for dollars for transactions, they can continue to print money without any problems. In theory, if they continue to recall debt, U.S. bonds may even not need to be repaid. The U.S. simply takes on new debt to pay off old debt. For example, today the U.S. owes Japan $1 trillion and this debt is due. At that point, the U.S. will ask Japan, "Do you want to continue lending to me? I will continue to pay you interest." If Japan agrees, the U.S. does not need to repay the principal. If Japan does not agree, the U.S. will borrow $1 trillion from the U.K. to pay Japan. 30 years later, the U.S. will find a way to repay the U.K. This is the strategy of buying time, or, to put it bluntly, delaying. By extending the repayment period, the U.S. can immediately reduce its debt pressure. These things are not taught in textbooks. People usually think simply that debt must be repaid immediately. In reality, debt can be delayed and even shifted to others to bear. But if the world sells goods to the U.S. and earns dollars but doesn't use that money to buy U.S. Treasury bonds or lend to the U.S., then the U.S. will not be able to recall the money it has spent. At that point, they will not be able to continue printing money. If they can't print money, they will have to work themselves, produce themselves, to earn money to pay off debt. This is the U.S. bond liquidity crisis, and this is exactly the situation right now. In the past, about 40–50% of U.S. debt was lent by other countries, but not anymore. Now, only about 20–30% of the U.S. debt is lent by other countries. This means the money the U.S. has spent cannot be recalled. When money doesn't return, it means the world no longer has a dollar shortage. If the U.S. continues to expand its balance sheet and print more money at this point, the dollar will immediately lose significant value, making the whole world even less willing to use dollars and unwilling to buy U.S. bonds. At that point, money will be even harder to recall. So, what to do? Some say Trump is working hard to find ways to repay debt, such as raising import tariffs, even selling U.S. citizenship. Just pay $5 million and you can become a U.S. citizen. What an international joke! As mentioned before, U.S. debt actually doesn't need to be repaid and also cannot be repaid. If the U.S. actually repays its debt, the entire global financial system will collapse instantly. Why? Suppose Trump succeeds in recalling money from around the world, bringing cash back to the U.S. But when he uses that money to repay debt, the money is withdrawn from the system again. Furthermore, the U.S.'s largest creditor is the Federal Reserve, Fed. Previously, the Fed printed money and lent it to the U.S. government. If the U.S. government now repays this debt, it is essentially destroying that money, making it disappear from the system. So, why does the U.S. have to print money? Because earning money through labor is too hard, so they choose to print money, sell bonds, recall money, and then continue to print money. If the U.S. now not only stops selling bonds, but also tries to repay debt, they will not be able to print more money. So, the U.S. doesn't need to repay debt. Why should they? If the U.S. dares to reduce the scale of its debt, it will destroy itself. Because if the U.S. collects $100 million and uses that money to repay debt, when this debt doesn't even need to be repaid, they will run out of money themselves. When the U.S. has no money, the problem isn't just that the U.S. stock market collapses, but that all of Wall Street will shut down due to lack of liquidity. If no one has money, businesses also have no customers to sell to, and the economy will stagnate. At that point, the scenario many people hope for will appear. Houses in downtown U.S. areas could drop to just $100 a house because the economy falls into deflation. But at that point, most people's assets will also decrease in value to just $1, and banks will also have no money to lend for buying houses. In other words, even if house prices fall sharply, asset values will also fall. Most people will feel that houses are still too expensive and unaffordable. Therefore, don't think that the U.S. repaying its debt and causing deflation is a good thing. This will only make U.S. assets cheap and the American people poorer. Therefore, understand this clearly. No U.S. president dares to actually repay the national debt. Repaying debt is just a slogan for television audiences. The U.S. government's real mission is to find every way possible to reclaim the right to issue money, bring money back from the world, and continue printing money. That is, to expand the scale of public debt. In other words, as U.S. debt increases, the amount of money printed will also increase, and the dollar will continue to lose significant value. Pumping money into the market needs assets to absorb it. Otherwise, it will lead to uncontrollable inflation, causing asset prices to skyrocket. So what's the advantage of retail investors compared to big players like Warren Buffett? It's flexibility. Buffett might have to prepare a year in advance to buy or sell assets, while we just need to wait for the exact moment when capital flows in and pushes up stock prices before placing an order. In other words, the big players create trends, and we just need to follow the trend, make money, and get out.
Now, listen carefully. If you don't understand this part, you won't be able to grasp the important content that follows. Currently, the U.S. cannot recall money because the world has stopped lending to the U.S. When money doesn't return, the U.S. cannot continue to print more money. So what do? Very simple, something everyone has experienced: increase borrowing interest rates. If before you lent me $1 million and I paid you $10,000 in interest, but you don't want to lend anymore, now I'm willing to pay $50,000 in interest for you to earn more. That's why the U.S. has succeeded in attracting money back from around the world. However, the consequence is that most people only buy short-term U.S. bonds. Long-term bonds, however, are not desired by anyone. Furthermore, seeing the U.S. market rise, many people have jumped in to speculate, further pushing prices higher. If you want to understand more, please re-watch my previous video posted every Monday, as all my logic is closely linked.
In other words, the current result is that the U.S. has recalled all dollars from around the world, but that money doesn't flow into the hands of the U.S. government, but rather into the U.S. stock market, that is, into the hands of U.S. capitalists. As mentioned before, the U.S. uses government bonds to attract money from around the globe without immediate repayment. They borrow money for 30 years and then use that money to pay off short-term debts that are coming due. That is, borrowing long-term to pay short-term. But now, short-term bonds are still being bought, while long-term bonds are not desired by anyone. No one is willing to lend to the U.S. for 30 more years. This means the U.S. government's model of borrowing long-term to pay short-term no longer works. When this mechanism collapses, the U.S. will have to continuously pay short-term debts at high interest rates. For example, in 2025, the U.S. has about $8 trillion in debt maturing that needs to be paid, and also needs to borrow an additional $2 trillion in new debt. But currently, the national treasury only has about $600 billion. This amount is not even enough to cover regular budget expenditures, let alone repay debt. With no money to repay debt, the U.S. could choose to print more money. But as mentioned before, if money hasn't been fully recalled and they rush to print more, the dollar's value will plummet instantly, making it worthless. So what will the U.S. do? This is the key point. The U.S. Treasury Secretary stated that the most important task now is to sell long-term bonds. What does this mean? When I talked about this before, many people scoffed at me, thinking I was fear-mongering. But now, experts on Wall Street are saying exactly what I said before. U.S. traders are currently preparing for a stock market crash scenario to shift capital into long-term bonds. Why are they doing this? Because if the U.S. wants to continue printing money without actually repaying debt, there's only one way: force the capital in the U.S. stock market to flow into long-term bonds. But how do they do that? One branch of the Federal Reserve recently announced that U.S. GDP will experience negative growth. At the same time, recent U.S. economic data all indicate that the economy has entered a recession. Why? For example, if you're doing business in the U.S. after Trump imposes tariffs, your import costs will skyrocket. This forces you to raise product prices, making them unaffordable for many Americans, causing goods to pile up and putting your business at risk of bankruptcy. If you're still holding on, congratulations. But after Trump deports undocumented immigrant workers, you'll lose your source of cheap labor. At this point, you'll be forced to hire American labor, meaning your wage costs will increase many times over. If you're still surviving because you're working with the government, thinking that doing business with the government means no shortage of contracts, then the bad news is Trump also announced a $1 trillion cut in government spending. At that point, you won't be able to bear it anymore and will be forced to look for a job in the public sector. But just when you feel secure with your golden rice bowl, Trump again announces the layoff of hundreds of thousands of civil servants to save costs. You then turn to large corporations like Amazon, Facebook for jobs. But all these major companies are also cutting staff en masse. The result is that even the elite workforce in society faces mass unemployment. What about your home loan, your car loan? When you're unemployed and have no income, how will you pay your debts? Currently, the U.S. credit card default rate has risen to the level of the 2008 financial crisis. So you see, Trump is shouting, "Make America Great Again," but everything he's doing is actually pushing the U.S. into a recession. Why is that? It's very simple. The U.S. manipulates the narrative about economic recession, constantly announcing that the U.S. economy is about to enter a recession, sending a message that even the strongest economy in the world is going down. That means there is no investment that is truly worth anything. No matter where you invest, you will lose money.
In such a high-risk environment, U.S. government bonds offer high and stable interest rates. This means you should quickly shift your money into U.S. bonds. And you shouldn't just buy regular U.S. bonds, but long-term bonds, because currently interest rates are at 4 to 5%. If you buy now, you can lock in this interest rates for 30 years. If you don't buy now, when everyone rushes to buy, interest rates will fall and bond prices will rise, making you pay more to own them in the future. That's why so many people have been pushed into a race for long-term U.S. bonds. From here, 3 scenarios are possible. Scenario 1, the beautiful dream, low probability. U.S. bonds are successfully sold without the U.S. stock market collapsing. If so, no problem. But, as mentioned earlier, U.S. bonds and U.S. stocks are like two ends of a seesaw. Money flowing into bonds means stocks lose capital. Currently, the amount of capital needed to compensate for U.S. bonds is enormous. To maintain balance, U.S. stocks would have to gradually decline for a long time, while still requiring continuous capital injections to support the market. However, this possibility is quite low. Scenario 2, the intentional crisis. High probability, this is where you get rich. U.S. bonds surge due to high demand, but U.S. stocks crash rapidly, just like the crises of 2000, 2008, and 2020. At that point, the U.S. can recall money from bonds, allowing the Federal Reserve to expand its balance sheet, printing more money without hindrance. The printed money can then be lent to financial corporations at near-zero interest rates for them to buy up stocks at bargain prices, pushing the stock market back up. This is precisely why Warren Buffett and large financial institutions are holding massive amounts of cash. Because whether the first or second scenario occurs, U.S. stocks must fall first. Scenario 3, the worst nightmare. You need to protect your assets. U.S. stocks crash, but capital does not flow into U.S. bonds, leading to both U.S. bonds and stocks plummeting. At that point, the U.S. economy will truly fall into recession, and this recession will be prolonged. The reason is that if U.S. bonds cannot be sold, the U.S. government cannot recall money, meaning it cannot expand its balance sheet to print money to save the market. If they print money regardless, stocks might recover, but the U.S. dollar's value will plummet. For example, you invest in U.S. stocks and gain 30% profit, but if the dollar loses 40% of its value, you actually lose 10%. The shock at that point will be enormous because there are still many countries in the world holding large amounts of dollars. If dollar-denominated assets crash, the entire global economy will spiral, triggering a global crisis. So why is Trump actively doing so many things that harm the U.S. economy? In reality, he is holding a dagger to the throat of the entire world, sending a message: if countries buy U.S. bonds, everything will be fine. But if countries continue to refuse to buy, then when the U.S. collapses, the world will collapse with it. When a financial crisis spreads globally, what happens? Other countries will have to prioritize saving the U.S. before saving themselves. Remember the 2008 financial crisis. It originated in the U.S., spread globally, but the U.S. was the fastest country to recover economically. After all, the U.S. is still the U.S. But I must reiterate one thing.
If you clearly understand how the market operates, not only will you make money, but your speed of making money will be faster than at any time in the past. Hearing this, some might say, I'm just making things up. Honestly, I don't blame them, because they might be new. But at least please re-watch my previous videos. In fact, I'm not trying to prove anything or boast. I just want to remind everyone what the current risks are and what opportunities we, investors, are seeing. I only hope that with a little influence, I can help those who are destined to avoid this crisis. At the same time, I also want to tell you that in 2008, many people were just construction workers or waiters at a hot pot restaurant. But now, many of them have become wealthy people around me. After 2008, the wealth gap became fixed. Those who were once waiters now don't need to do anything. Their assets continuously generate income, even earning in a month or in an hour what many people can't earn in a lifetime. I was born later, so I was too young then and couldn't seize that opportunity. But this time, the opportunity might come again, and I am mature. More importantly, if the opportunity truly comes, I am ready. My sleeves are already rolled up. And if this opportunity doesn't come, it's fine. We just need to adjust our strategy. In the coming period, we will monitor the U.S. bond market. But this is not a long-term strategy. It's just short-term, speculative trading. Because as mentioned, if U.S. bonds are saved, the government can continue to print money and bond prices will rise even further. But what if they can't be saved? Therefore, our strategy is to strike fast, retreat quickly, and take profits, just like guerrilla warfare.
If you found any part of today's video unclear, I recommend you re-watch the previous 2 or 3 videos from every Monday, as all my logic is closely linked. There have been many significant market fluctuations recently, but due to time constraints, I will stop here. I share free knowledge on how to become wealthy, an entrepreneur, and an investor to achieve financial freedom. If you don't want to miss out, follow my channel, turn on notifications, and share this video with everyone. I also send my best wishes to everyone who has liked this video. May you all achieve financial freedom soon. If you found just 1 or 2 useful sentences in today's content that helped improve your life, I am already satisfied.